Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bullish white soldier yesterday and a follow-on to the previous session's counter-to-counter bullish harami. Whilst the action itself was small, it was significant as the market took on the overhead resistances of the middle time, currently at 105.94, of the January to May 2021 bearish Andrews pitchfork, backed by the declining short-medium moving average, currently 106.09, and the mid-February to date downtrend, currently 106.23. I'd also add the April 2017 low at 105.68 to the list. Well, prices breached the April 2017 low and the middle time, but were stopped by the short-medium moving average. We ended the day closing just over the April 2017 low. However, the significance was that this was the first attempt at the middle time since early June, and it looks like it might just be a sustainable attempt. Looking below, we still have the same very recent support area below between 104.92 and 104.51, which contains both the February and March 2017 lows at the same 104.92 number. This zone is still a significant force. To sum up, as I've recently said, the declining bearish pressure and the stationary support is slowly squishing the market. This may well end up as a volatile period soon, much as toothpaste getting too quickly squished in the tube or out of a tube. So far today, not much. I moved down to the April 2017 low as well as over the middle time, and almost touching the declining short-medium moving average, but at this time looking like an indecisive spinning top. Cable, aka sterling against the US dollar. Yes and no, this is getting silly now. Yet another indecisive pattern yesterday. This time it was an indecisive doji cross. This is most definitely the fourth indecisive pattern in a row, and arguably it could be the sixth, depending on the count. There is a very high risk now of a possible future engulfing pattern and even a possible key reversal pattern, purely because the open and close is being all so near to each other. There's one further factor to throw in on top of all this. You see, yesterday was also, because of the range and slightly higher close than last Friday, it was also a daily key reversal. As you can see, by doing nothing, market sometimes just makes things more confusing. The close itself was once again just over the the June 2020 low at 122.48. Overhead, we still have the upper time, currently 123.19 of the late April to late May bearish shift pitchfork, and entwining it is the falling short moving average, currently at 123.15. It's also paralleled a little higher up by the short medium moving average, currently 124.92. It seems the market continues waiting, though for the life of me I don't know why, as below under the May 2020 low at 120.73 there is little support bar the middle time, currently at 119.80. Maybe it still is the previously mentioned enormity of the empty space below the May 2020 low. Anyway, I've recently put forward the idea that the action since late April to date is a type of bearish halfway hesitation. It doesn't look very much like that anymore, but I'll still keep it for now. It doesn't. I'll give it with initial target X in the 117.50 area, should this pattern develop. Finally, and this may be becoming interesting, there is the possible construction underway of a diamond pattern. What is interesting is that the market seems to be exiting the proposed pattern through the lower uptrend of this diamond pattern, currently 122.68. A first look will give it a bearish tint, but I am so wary after seeing so many indecisive actions that I will defer any ideas on this for a few sessions more, just in case of a false break. And so far today, well, another indecisive pattern in the making so far, based on the June 2020 low. Euro sterling. A second bullish white soldier yesterday and a suitable follow-on higher to the previous session's immediate countering bullish double and hammer pattern as well. The most interesting feature was the second consecutive close up over the short late May to date upper trend line, currently 85.95. This short trend line has seen action above it, but it had previously been limited to single separate closes. Hence, you can view it now as being broken. A little below is the neckline, currently 85.72 of December 2021 to May 22 reverse head and shoulders pattern. This neckline is the extension of the rising upper trend line of the original extended diamond pattern. Hence, moves above it are important. Looking higher, we have last week's high at 86.41 as resistance, but beyond that there's little until the April 2020 low at 86.69, and that resistance doesn't look that good. Beyond that, we have target X. Now, target X in the 86.80 area is the primary target for the recent small lopsided diamond pattern, with a harder to get secondary target X1 in the 87.65 area. We also have, for the recent extended diamond pattern, not the lopsided one, the extended one, a primary target X2 in the 87.15 area, and a harder to get secondary target X3 in the 88 even area. For these two diamond patterns, both primary targets, target X in the 86.80 area and target X2 in the 87.15 area, have already been achieved. There's also a bigger pattern, one I have been speaking about now for months. It is the very large falling wedge pattern, currently 84.43 to 81.24. This pattern is still in operation, but has fallen into the shadows a little with the rising prominence of the diamond patterns, and though triggered, it still leaves us with some serious questions. You see, as the most ambitious upside target of all, target X4 for this pattern is in the 88.65 area, and that's a really big ask. More recently, we've seen action at the previously mentioned neckline, currently 85.71 of the December 21 to May 22 reverse head and shoulders pattern. This support is also the extension of the rising upper trend line of the original and extended diamond pattern. A primary target X5 for this reverse head and shoulders would be in the 87.75 area, and a secondary harder to get target X6 would be in the 88.60 area. Targets X4 and X6 are currently just off the top of my daily chart. So far today, well, a small dip, but prices have rallied such that we're currently looking at testing last week's high at 86.41. Indian rupee. A second bullish white soldier and an excellent follow-on higher to the previous session's immediate countering bullish double. Yet another new higher high, higher open, close and higher low than, well, basically ever before. This was also an excellent start for this week after last week's weekly key reversal up right at the top of the market. The market punched up through last week's high at 78.39 as well as the upper trend line for the highs from mid-May, currently at 78.53. However, the market failed to close over this upper trend line. Now, looking at the action since the start of May, I have been contemplating which pattern will be the best fit to describe this action. The best I can suggest is a bullish measured move pattern. It is not perfect. For example, it slopes too much on the upside, on the right-hand side. But I think it's a better descriptor than a rising wedge pattern, or anything else, to be honest. Hence, a primary target X would be in the 79.67 area, and a secondary harder to get target X1 would be in the 80.43 area. I've also drawn projected Fibonacci levels from the earlier May action, and interestingly, the nearest is the 50% projected Fibonacci line at 78.85. On top of all this, we still have the formidable mid-January to mid-April bullish Andrews pitchfork, with the market between the lower time below, currently 78.20, and the middle time above, currently 79.65. Additionally, we're also in between the middle time below, currently 77.95, and the upper time above, currently 79.17, with a bullish shift pitchfork for the same move as the Andrews pitchfork. Well, this has been a lot to process, but it is all valid, and it will become clearer, I think, over the month end as time goes by. Now, so far today, a big move higher of the market, already testing the 50% projected Fibonacci line at 78.85. US dollar against the Brazilian real. A second consecutive indecisive pattern yesterday. This time it was an indecisive doji cross. but it could almost be seen as a duplicate of the one seen last Friday. The market once again spent a lot of time at and around the middle time, currently at 525.70 of the April to late June bullish Andrews pitchfork, as well as over the flatlining long moving average, currently at 524.83. However, prices still closed again below the long moving average and also barely below the middle time. The base of the action was once again on the Fibonacci congestion at 520.27. Interestingly, the 50% Fibonacci on the March 21 to April 22 move at 522.76 once more played little on a closing basis for a third session now. Overall, this is all a step, well, this was all a step closer towards target X in the 528.45 area. This is the target for the start of April bullish halfway hesitation. It's not a perfect one, but it's still there. Beyond target X, we have congestion at 534.23. US dollar against the Mexican peso. A reactionary bullish harami yesterday after 6 sessions of bearish black crows. This reactionary bullish action was not accidental, but coincidental, with a test low to the broken upper time, currently 1986.10 of the busted November 21 to March 22 bearish Andrews pitchfork. Now, previously I have suspected that this time may not be that much of a support, and we would likely need to look down at the April lows at 1971.68 as the next support. However, at the least, it seems now to be stopping off point in the market's desire to head lower, and maybe that will develop into a proper support. Only time will tell on that. Now, overhead, we now have resistance from the combination of the middle time, currently at 1999.87 of the November 21 to March 22 bearish shift pitchfork, and the flatlining short medium moving average, currently 20.0264. Looking below, we have some support from the April 22 low at 1972.10 and the 2021 low at 1953.63. Well, so far today, a slightly higher open, but very little other than a test down to the broken upper time, currently at 1986.10, before pulling back up to unchanged and actually maybe looking a little bit more, well, it could possibly be a hanging man pattern. We'll see how that develops. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.